Hello, it is the 15th of June 2011, and welcome to the Silver Log. In today's video, I'll talk a very little bit about the charts and talk about the new craze going around, the new virtual currency a little bit. I promised I wouldn't say it, so I'll change the name. It's not the name I given. Therefore, if you don't like the word that starts with S and ends with hit, then don't watch this video. Talk a little bit about channel direction, the resource-based economy, as well as a betting system that I've been working on that I'm pretty much giving up on, that has hit 80+% winners with over 2% gains on this Dow thing. And it's nothing more than a casino game. Whether you are playing any type of stock code to try to get a gain here, out here, in here, out here, whatever, it's a casino game, whether it's the silver market, the gold, a Dow company, or the shit coins. Same deal. I was considering a little bit on whether to trade those shit coins simply because, well, you can do it for less fiat money. With the actual casino of stocks, you're pretty much forced to bet a lot of money because of the rakes and commissions. I looked a little bit into it, and when I was starting to find headaches of getting it going towards it, and really not wanting to gamble anymore, it was like, screw that. I'm not going to get into it. But what's interesting about these shit coins is that I've given it. Well, I haven't even given it with somebody else, but the name shit coins is a noun. The first part of the noun is shit, which describes the word coin. I guess an adjective within the noun. I don't know. But not all nouns, I guess, have to be true. So if it's not shit, then it doesn't matter because of the second word, coins. There really isn't any coins whatsoever. And it was interesting. I had somebody state that they're going to unsubscribe to me because I don't promote these shit coins. And, well, I'm turning on DaVinci, which is interesting because if I were to promote them, then I'd be turning on myself. After all, I am an advocate towards a resource-based economy, which hardly anyone understands, at least from my research. And I really personally don't care right now if they do or do not, but there's no way that I'm going to support a new venture into something that has got to do with capitalism, and I have yet to have found any solution towards technological unemployment. That's totally on a different note. So I guess if I'm not talking about them, then it's worth unsubscribing. Therefore, if you're really into stuff like knitting, you might want to unsubscribe because I'm not going to talk about knitting at all. Well, I guess I sort of did now, but these charts that I'm showing, I'm going to stop doing the short-term analysis. After all, I know for sure that I'm going to stop doing them overall. I'm not going to stop doing the long term because, to me, silver is a hedge against capitalism. That's my personal feeling. And I'm doing all of these charts mainly for myself. If anyone happens to be learning off them, well, then that's amazing. But this is a hedge against this capitalistic society. As much as a resource-based economy would work out extremely well, it's unfeasible for it to happen anytime in the near future. Thus, that's why I like silver, which is something that has lots of tangible value, which is what a resource-based economy really looks for, is scientific, tangible value. Now, as far as short-term versus long-term analyses, we have a situation in here on the quarterly chart where we were making this pattern of lower highs and lower lows. This low here was a matching low, but then a matching low made a lower high, thus making a new lower low, lower high, higher low, higher high and a lower low, sort of a higher high, but matching more than anything. Higher low, higher high, higher low, and what might be a higher high here because it's still only one candle right now. At least this one into place. You can mathematically come back here to like 16 and still create that of a higher high. I think it's unrealistic for that to be the case, but we're living in that of an insane world. And at the same point, when we look at this chart, say on the shorter term level, this is about as short term as I'm going to want to do now, which is the daily chart. And this to me is short term, especially when you're looking at the short version of it. Since this move has came into play, you got this low, followed by this high, followed by this low, which was then followed by this high, which is then followed by this low, which is really interesting because when Stellar Concepts was even mentioning this pattern was lower highs and lower lows, he was staying at somewhere where it already made a higher low. So technically, it changed that position, but no, this is more of a sideways consolidation within, of course, that longer-term trend, which is higher. It's a boring range between 39.5 and 33.5 or so. And right now, when we look at this, we can see it's below the 18-period average. It's went above it, went back to it, pierced above it, and now it's went below it, showing a lot of indecision sort of plays. It's a manipulated market. It's never ran freely whatsoever, which is a reason why I want to get into, and I am getting into silver, because when you've had all of these markets, whether it be silver, gold, oil, whatever, all of them, that have been extremely heavily manipulated, then all of these short-term movements right now mean absolutely crap. It means absolutely nothing unless you're forced or you want to sell, or you're looking to buy. Because if you're looking to buy, then you might as well, or if you want to be like me, try to be strategic for when you place your orders. Before I was stating that I was going to buy on weakness at 39, which was the case, but because this candle was so big, I actually bought down in here. And then it was either on a confirmed breakout or another wave lower. Now, I did happen to buy again once again during this range, and if it continues going sideways, probably by the end of the month I'll do the same thing again. After all, it's all about protecting against the fiat dollars and protection against that of capitalism. But as far as buy signals myself, and this is just personal, on a break below this level, I would be looking around the 29 bar for a potential buy opportunity. As far as waiting for it to go on strength, then it really needs to confirm a break above this line, which is really also the 50-day moving average. Get above it, and the keyword about confirm is not just get above it, but show a pattern, say where it comes up to this Fibonacci level, back down here, and then as it's rising higher, something like say this, that's when you get in. That's what I mean by a confirmed move above that level, because overall there's only so much left within this currency. Okay, the next chart is that of, excuse me, the weekly chart. And we made this higher high, sorry, with a higher low, higher high, and right now this higher low is set at this Fibonacci mark, which is currently at about 32 and change. As long as it closes this week above the 18-period average of lows, which is 35 1/3, that I'm still going to be seeing this as cautiously bullish. And the only reason why I'm keeping it bullish is because this direction of these averages is in an upward trend. This has made the first lower low since it established it in here. The pattern of 4 consecutive higher lows has been violated. But as long as it's holding above this line here, then that's completely fine. If it comes down towards this level here, given how big this Fibonacci mark is and how it's been a decent amount of time since it's touched it, I would expect that of a bounce, but what's really concerning is a bounce here that finds resistance where we found support, which would be roughly around the 34.5 level up to 35, and then breaking below here, which would then bring me to the next objective of 25 and change, which I really, really, really don't think is going to happen. And it might, but which is why I'm setting my target bar down for 29, which is also below where the 200-day moving average is, because it's above $30 per ounce right now. But then again, that's all trying to pick the old trading mechanism. Now, I was going over a different little system as far as trading stocks or anything for that matter by using a mathematical level. And at first, I was really, really uh, confused to why the results were so good, and I still am. And this is how the trading system would work out. Within the Fibonacci, this is within 67 periods, but the one that I got set up is 50, and I don't really think it matters too much, but you need your Fibonacci mark, your two lines like this, and what you need to do is trade and close 5 consecutive periods above this line. Once that happens, then the moment you come back down to this line, you buy. And you sell when it hits this line. Just that simple. Now, it's not easy to do, and these numbers can change on a day-by-day basis. This has no protection whatsoever against a stock market crash, although it's like a negotiator that works hard to get you the top sale. So if the market does crash down, it oftentimes will at least get you a decent amount of the losses back. And the way this worked out within the Dow Jones going back to September 30th using the daily chart was 144 wins, 22 losses for an average gain of 2 1/3%, just trading the 30 stocks within the Dow Jones, which represented about 160 plus bets, or 166. And it would have worked out by trading 25,000 a wager with a 500,000 start, or 1/5 of it, that you would have pretty much gained 20%. But that's not really all that impressive for me when the markets gained 20% over the same period of time. So I was, okay, whatever. I want to do some more testing towards it, and I wanted to see how a random stock would do. And it was the complete reverse. This is random stocks that are supposed to trade sideways. The AI was set up for it to have the exact same chance of going up as it does going down. And by using that same methodology, by waiting for it to go above Fibonacci for 5 periods, come back down to the second lower line, and then sell at the top, would have been damaging within this random situation. Now, it's very hard for me to do results, and I pretty much stopped doing it at around 125 as this thing was getting crushed to oblivion, basically stating you do the opposite, that when you have the Fibonacci markets are trading, and then you come back down here, that instead of buying, you'd actually want to short, and then cover your short when it hits up here. Because then you would have had an amazing, amazing gain. I did this as well with the dollar index file. I don't have the chart on me, but it pretty much has lost 2/3 its value by betting on the dollar index. However, just by picking different matches like the euro to the yen, the Australian US, all these different ones, making sure that the US dollar was both at the start and at the end of a few of them, recently it's been doing pretty well, but enough results where it doesn't need too much. But I did mention on my blog a few days ago that I was looking at it, and I'm also now giving up on this as well, because to me this is a waste of time. This does nothing productive towards society, and the only thing productive it does is analytical skills within numbers. Alrighty, thank you for watching, and have yourself a great day. Bye bye.